Welcome into my Vanguard portfolio update. Almost there at the end of the year now in 2025. I cannot believe we're saying it. It's just one more to go after this one. As usual, we'll quickly have a look at everything going on in the markets and some news updates before I also go into the portfolio itself. So firstly, just on the markets, I'll have a look here at the S&P 500. It's been a pretty wild ride this month. We saw lots of new all-time highs over the past 30 days at the end of October, but November, the stock market rally has taken quite a sharp turn, as you can see here. Now, we've got lots of this to discuss a bit later on, but there's the latest numbers as I'm filming this video. Now, just very briefly from an UK perspective, the S&P 500 here, let me just show you how it's looking when we're buying in pounds. This just reflects the current exchange rate. You're still up 3% or so for the past month, even after all of this volatility. So a good reminder there, just to make sure that you zoom out and think about things for a long-term perspective. Lots of the recent headlines about doom and gloom and everything's going to crash really don't reflect what's happened over the past 30 days or so. Now, very briefly, closer to home, have a look here at the FTSE 100. For all of you UK diehard investors that hate US stocks and hate investing in the global market, the UK has had an extremely good month and year. If you have a look here on screen, you can see the FTSE 100 up nearly 5% for the month as I'm filming this video, may even cross that slightly later on today, setting all new, brand new all-time highs. Have a look there. Other assets like gold still flying pretty high, did take a bit of a breather. It's not quite near all-time highs anymore. Bitcoin had a similar story as well, down about 6% for the month, having a nice peak, but then also has been suffering a bit recently with everything else going on in the market. Now, on to news. I think the biggest story really has been about all around the fears of the stock market crash, AI bubble, overvaluation, and all of the things that are surrounding that at the moment. You can't really open up a financial newspaper or go on YouTube without talking about the stock market crash. Hey, I even made a video myself, and also I did a bit of an in-depth chat as well, if you haven't seen that already, on the Making Money podcast as well. So myself and Damien and T sat down and had a good hour-long discussion about whether the stock market is overvalued, if we're in kind of a bubble, and hopefully many of you will probably enjoy that conversation. I'll either leave a link or put something on screen now if you're not aware of that podcast. So a lot of the issue seems to be a couple of things. So huge companies are spending vast sums of money on their AI infrastructure, whether that's chips from NVIDIA or data center space, etc. And although these companies are making lots of money, which include the Magnificent Seven, they're spending a lot of money and not necessarily getting anything back directly from this AI investment. And you're also in this weird web at the moment of companies investing into each other and committing spend, but that money isn't going anywhere. So it's circular. So for example, it would be like NVIDIA investing into OpenAI for $100 billion and OpenAI saying, okay, well, we're going to now spend $100 billion with NVIDIA on their chips. And we'll have similar deals going on in the market at the moment. Likewise, we also see the likes of OpenAI committing to vast sums of money to spend on data centers and cloud computing, etc., when their current revenue and, well, they don't make any profit at the moment. So those numbers don't match up to what they want to do in the future. So there is a lot of concern in the market at the moment that people are hyping up AI and the potential of AI and what really this means for investors. Is it all just going to be a huge, massive waste of money? And are these companies going to emerge out of it just poorer, billions and billions of dollars? Or is everything completely changed? For a much longer in-depth analysis, definitely go and have a view, have a listen to the podcast I did with Damien and T. Now, during this month, we saw one of the worst weeks since April in the stock market. Multiple days of huge red numbers from all of your favorite stocks. Pretty much everything was down. Almost nothing was able to escape the stock market crash, as lots of people wanted to frame it happening this month. But as we've already seen at the start of the month as I'm recording this video, things have taken quite a big recovery. That's due to a couple of things which I'm going to talk about in a moment here. What I will say on this story is it's just amazing how very quickly things can change from euphoric, everything's going up, everyone's FOMOing into the stock market, to everyone's fearful and everyone on TV, every single article you read is end of the world, this is it now, stock market crash. And it's such a reminder. I've said this so many times in the past, but this is just totally irrelevant for long-term investors. But it is just so amazing how things can flip. You can end a week on an amazing high, and then come Monday or Tuesday, things are massively in the red, and some stocks are selling off massively, losing tens and hundreds of billions of dollars of market cap now. But for me personally, just you get used to these things. But if you're a newer investor, certainly it can be scary, but genuinely in the long term, I don't pay myself any much attention to this sort of thing. Now, moving on, part of this recovery has been caused by the fact that the US government is finally now going to reopen. Not yet as I've recorded this video, but it looks like that's about to happen. Now, believe it or not, this has actually been the longest US government shutdown since we've ever seen. And this has actually broken the current record of 35 days back in 2018, and effectively means that different government departments have been shut down, kind of on furlough, or at least the essential services have been running, but without pay for many things, whether it's a flight controller or people looking after some of the data from different industries, whether that's looking at interest rates, growth, jobs data, etc. All of this has been going on hold. Huge arguments back and forth over in the US political scene, trying to get themselves back up and running. But touch wood, things look like they're going to go in the right direction now, and the government is going to be back open. There's still going to be plenty of political problems, but the market has reacted quite positively to this now, at least. And this could be one of the reasons the market had a bit of a rebound this week as I'm recording this video. But as usual, anything can happen before this one goes live. Okay, let's briefly take a look close to home now. As I mentioned earlier, the UK FTSE 100 has actually set new all-time highs, at least as I'm recording this video. And as I can see at the moment, I'll put the latest data up on screen now. I think a pretty good day so far. Also, if I expand out the performance of it, generally from a year-to-date perspective as well, up 20% or nearly 20% as I film this video. Now, that's actually up more than the S&P 500 is, even in a dollar term, and from a UK pound perspective by the S&P 500 as well. It's beating it by a long shot as well. So let me know in the comment section if you're quite heavy into the UK. I don't think this necessarily means that the UK, or the FTSE 100 at least, is set for a boom in the next few years, but I think it is more of a lesson of how important diversification is. Remember, the FTSE 100 is really made up of lots of global international stocks, not necessarily technology companies. And these companies tend to be quite defensive, meaning that in the event of an economic, catastrophe or a stock market crash, these companies are still going to do pretty well. And lots of people are going to spend money on their products. They're in very safe industries like financials, healthcare, etc., global mining, those sort of things. So although it will take a little bit of a hit, it's not going to take as much of a hit as, say, a technology stock would if the market were to crash. So maybe there's a bit of money moving as a flight to safety away from those US stocks. Now, the biggest news story is one that hasn't quite happened yet, but we do have the UK budget set on the 26th of November. So as soon as that one does hit, I will cover that one, probably make a video the same day. This one's going to be a bumper one. There's going to be loads to cover. Whether it affects a huge amount from a UK investing standpoint will be another matter. I'll have to go through some of the fine details. But ultimately, if things like income taxes go up, then people are going to have potentially less money to spend and invest. So that could have some repercussions. But importantly too, there could be reforms on ISAs. Now, I covered the last budget. There was a lot of hoo-ha around whether the cash ISA allowance was going to get cut. Now for this one, again, it's still very much on the table. Whether it gets cut to £10,000, £5,000, I have no idea, or whether it just gets left entirely, who knows at this point. My opinion on all of this at the moment is always, I don't make any changes to my investing behavior or anything like that based on speculation, and I'll cover everything and deal with the rules that were set at the time. At the end of the day, anything announced in November is highly likely to only take place in the new financial year, especially big changes like income tax or anything to do with pensions as well. So although they're very free to make changes overnight, it's highly unlikely this will happen. They'll take a lot of consultation from not only the industry, but then also lots of processes and machines effectively have to be changed, payroll systems, companies, businesses, etc. So I wouldn't really expect things to happen straight away, but I'll be covering it and I'll be really interested in your opinions once we see actually what's been going on. But this one's been more speculation than I can remember for a very, very long time. And finally, a UK news story that I wanted to cover just before I go into the portfolio itself, but we can see that UK unemployment has risen faster than it was expected. The number released was 5% today, whereas 4.9% was expected, meaning that the UK jobs market is slowing a bit more than people wanted. This is not really great, leading on from the story before about the fact that we want to get growth in the economy. This is relevant because leading on from the story before, Rachel Reeves and the Chancellor and the government themselves do want to get the economy growing faster and faster, because otherwise we're going to have to pay more and more taxes, especially to service that enormous debt burden the UK currently has. You can also see here in the same story that wage growth slowed, but it still went up 4.6% over the past 12 months on average for all people, which is a very quick reminder as well for me that if you're in a job, especially in the private sector, and you're not getting at least a pay rise in line with inflation, you are effectively losing money. So always make sure you're either trying to negotiate that every single year or move jobs if you can, because if you're not getting a pay rise in line with inflation, you are getting a pay cut. Okay, let's have a look at the portfolio itself, see how things have gone, see what's actually happened over the past month. I'll also let you know exactly what I've done as well, because I've made a couple of changes, not really changes, but I've made a couple of investments outside of my normal regular investing. Now, if you are new to these portfolio updates, or maybe you've only just watched a couple, I want to just remind you exactly what this account is and what it's used for. So this is my self-invested personal pension. This is the only account I have with Vanguard. My stocks and shares ISAs are with other platforms, some of which I cover on YouTube. Now, the reason I picked Vanguard for this specifically is twofold, really. One, yes, it's a trusted platform, nice and easy. But secondly, all of the contributions that I put into this account come from my limited company. So not all pension providers, SIP providers, allow you to put money in from your limited company. Lots of them will allow you to put in money personally as an individual, but not as a business. So I use this platform really because it allows that. And there's only a handful of providers that actually allow you to do that. And then I keep things very, very simple too. Now I do that because it's extremely tax efficient to put money into a pension. And that's both true whether you're an individual or whether you're putting money in from a company if you're a director of a limited company, because it basically counts as a business expense. So there's no corporation tax to pay, and there's no personal income or dividend tax to pay because this money is going straight into a pension. So effectively, every £1,000 that I put into this account has only really cost me like, £600-700 or something like that if you work things out. So it's an extremely tax efficient way of doing things. So it's really good to see the account grow, but the biggest reason the account is growing is because I'm putting substantial amounts of money in. I try and put as much money as I can. My average at the moment, I've tried to be running around £4,000 a month. Now, this is an enormous sum of money. I realize people watching this might think this is just completely out of touch. This is out of touch reality. This is not my personal money going in from my own income. Okay, this is coming in from my business. And bear in mind that there is no other pension. No one is paying a pension for me. So there's no contributions going from a workplace provider or anything like that. This is my, my insurance product really to make sure that I can actually have a comfortable retirement or some kind of financial freedom. And I'm doing it really because I can. So I'm sacrificing money that I could pay myself handsomely today. I'd rather actually sacrifice that for a pension later on. But all the principles are the same, whether this is £4,000 or £40. And that's the key thing here. So don't get discouraged by seeing big numbers. I mean, this might be small to you, this might be big to you. So just remember to go back to what's important. So outside of that, my usual deposit is on the first of the month. I typically make it the first. Sometimes it slips, but I'll try and put in 4,000 here. As you can see, on the 15th of October, I did put another £10,000 in. This is because my company tax year runs from start of November to the end of October. So I was looking at everything thinking, right, bit of spare cash in the business. I don't want to pay myself any more money. I would like to reduce my tax burden and I want to use my money tax efficiently. So what's a better thing to do? Because I'm not anywhere near my limit for how much I can put to my pension. So time to put some money in there. So as you can see, I bought that. Wasn't a particularly great time to buy. I don't really care about that. I'm not trying to time the market. So I just wanted to get the money in. And very simply, let's go to the investments. So you can see what I invest in. Again, regular viewers, I know you'll be sick of this, but if you're brand new here, I'll just talk you through what I actually try to do with this investment. So I keep things really, really simple. This is a single mutual fund. Everything I'm invested in goes into this fund, the FTSE Global All Cap Index Fund. It's accumulation version, which all that means is all the money I put into this gets invested in lots of different stocks around the world, all based on market cap weight. Really, really simply put, just basically means I own shares in almost all companies around the world, and I don't have to worry about any dividend payments. Everything just gets rolled up into this number you see here. And you can see total portfolio value is 141,000, and that's a unrealized gain at the moment of £31,171. Really, really nice to see the account in six figures. It was only not too long ago where I crossed that 100k mark in the account on the pension. And really, I pay almost no attention to this during the month. I don't log into this. I'm not interested in the value. I can't touch it until I'll be, mid to late 50s anyway. So for me, this is all about trying to be as tax efficient as possible and getting as much money in. Here's a really good graph that I like looking at just over the long term. You can see here everything that I've done so far in this account. Bear in mind that I moved old workplace pensions into this account many, many years ago. And you can see since really that it's all been about how much I've contributed to the account. You can see month by month here how things have been going. As you know, from the start of the year and the start of last year, we've had pretty much a straight run up as a bull market. So everything going in has seen pretty nice returns. But you can see so far in November 2025, personal investment returns are in the negative. So really nothing much has happened. But every other month has been storming returns, really, as you can have a look here. And we don't have to go long back to those crazy months we had at the start of the year, if you remember, back in April, those long months away when the account took a big hit, but many people's portfolios did. But Again, because I'm not interested in selling, it was totally irrelevant for me. The number on the screen that you see has no relevance to my own behavior. I just focus on what I can control, what I can afford to invest. That's a key investing philosophy. Trying to time the market, guessing when things are going to crash. Well, you can say the same thing every single year, every single day. You will find an article or a person saying that the stock market is going to crash. And that's been going on for decades and will continue to go on for decades indefinitely because people are attracted to all of that doomer nonsense. Anyway, as always, love to hear your feedback and comments in the section below. Let me know how you're getting on this month. And as usual, happy investing. I will see you in the next video.